Welcome back to Do Less Podcast with John and Jeff. We had some pretty great feedback coming in from you guys last podcast. Here, we got tons of examples. Just one comment here. Hey guys, your podcast was really great. I was having a lot of trouble falling asleep last night, and I put it on and I went right to sleep. So thank you. That's some great feedback from our listeners. We'll just try to keep that going. Let's see. We got another one here. Hey Jeff, you borrowed my Chromecast 3 months ago and still haven't returned it. Please bring it back to me as soon as possible. So, I mean, listen, the feedback's great. We're on a good track here, and so we're just going to try to keep the ball rolling. But one of our listeners asked, what is Do Less? Why is your podcast called Do Less? So, John, I don't know if you want to elaborate on that.
Yeah. Just to reiterate, that's some great feedback. So thank you guys for providing that and listening.
We really appreciate our listeners.
But yeah, so Do Less makes me think of the movie Forgetting Sarah Marshall. In a great scene where he's trying to learn how to surf, and his guide is telling him to do less, and he's doing less, and he tells him, all right, now you're doing nothing. You got to do a little bit more than that. And that's kind of where we come in. We're here to call people out, to try to help them. We're here to help people. That's why we started this podcast. We're
Yeah, think of us as Paul Rudd, guiding you on your surfing lesson through life.
We'll tell you when you're doing too much,
but and when you're doing nothing at all.
Yeah, we'll keep you in that sweet spot, and we'll all get better. So,
yeah, we'll tell you when you're boogie boarding, because you don't want to be boogie boarding. You want to be surfing.
Yeah. But yeah, so Do Less is just the philosophy of when there's a matter, when there's a problem to be solved, a lot of people come up with solutions, Band-Aids almost, that they try to be expedient, they try to solve the problem. They say, oh, this went wrong. We can say, let's stop doing this, let's stop doing X and Y, and we'll solve the problem that way. In a lot of ways, it's kind of jump into conclusions, quick thinking. It's not necessarily as effective. Sometimes the best solution, which is actually there's actually some cognitive dissonance with this solution, but doing less, not just jumping to the quick solution, not just doing what's expedient, really thinking through the problem allows you to, what it does, it puts the onus onto the people that are trying to come up with the solutions, trying to put the Band-Aid on it, and you can ask them, prove that, ask them to prove that what you're doing is the correct thing to do, which is a really hard thing to do. It's a lot easier to say we don't know what to do, so we're not going to do anything, as opposed to we want to do something, so we're going to do something. So that's just kind of the mantra that stuck with us, it sticks with us, and it's applicable to all facets of life, including economics, which is the main focus of this podcast, along with other things. But we're going to be discussing economics today, today being the day of the FOMC meeting. The Federal Reserve came out with their policy. So what else, Jeff? What do you have to add?
Yeah, I mean, about Do Less. Picture you're back in the classroom. It's middle school. It's 7th grade, and something's not right. Something's just not quite right at the end of class, and then there's always that one kid in class who raises his hand and says, "Teacher, you forgot to assign the homework." And then everybody in class is like, come on, put your hand down. Like, do less. That's do less, right? If you had just sat there and just been like, something's not quite right, but, I'm just going to go on my way and eat some Scooby snacks at lunch, everything would have been good. But the fact that he just felt the need, you forgot to assign the homework. Now you all got homework. So sometimes the right solution is just do less. So here's another example. You're on a first date with a guy, because you're a girl in this scenario. I don't know what to assume. But you're on a first date with a guy on Tinder, and you show up and he's carrying a bouquet of flowers. That's a little weird, right? What's he hiding? Why is he being so nice to you? He doesn't even know you yet. That's a lot. He's doing way too much. He's got to do less. What do you think, John?
Exactly. Uh, Sometimes doing less is the way you can do the most and be the most effective. So, um,
Brilliant.
another thing, I was just reading this today, is something that I've actually been advocating for a while. Is the NCAA is now going to allow student athletes to profit off of their likeness, off of their image, and off of their name, which to me is kind of a no-brainer. But it's been against the rules of the NCAA for quite some time, and just like today and yesterday, they came out and said uh, college student athletes will be able to profit off of their image. Within the hour of that announcement, there was a congressman from, I'm not sure where, but he tweeted uh, a direct reply to this, this announcement from the NCAA was, now that student athletes are going to be able to profit, it's not fair that they're getting scholarships. I'm going to make a point, if you reelect me, to bring legislation against student athletes and allow their scholarships that they receive to be counted as income, so that they'll be on the hook for income tax. You elect me, and I'll bring this to reality. And I just read that, and I'm just like, this guy is just, it's just his bread and butter. He's just doing the most. Everything he's reading, he's just spinning it. He's like, I'm just gonna spin this and make it for my reelection. What are my constituents gonna vote for? Someone who can bring in more income tax. That's it. That's exactly what my constituents want. And so he sees
Just
that,
like
just jumps on it.
squeezing that lemon for all it's worth.
Right. Yeah, it's just, it's almost like he didn't even think it. He didn't think about it. Like, didn't think about who's benefiting. Didn't think about who's this good for. He was just thinking, how can I make the most out of this, and
Right.
just create this whole big, extravagant, scene out of something like that to just turn it around to be about himself. Um,
Yeah. Do less, man. Do less.
right.
Speaking of important things that happened somewhat recently, Obama, they took a clip from him at I guess, I don't know what it was. It was like a speech thing. I don't know, some sort of get together.
Yeah, some public interview.
I really don't know what. Yeah, I don't know what it was about, but basically they had this video of him giving a speech talking about how, I guess he calls it call out culture. Some people call it cancel culture. Everyone's got a name for it. I call it doing too much. But the point is, you got a lot of people who, if they see someone has committed a sin or what have you, they go immediately onto social media and just completely trash talk the person, try to bring them down. Some people be like, you need to fire this person from whatever they do because they said the wrong thing. And then when they get fired, everyone's like, yes, I've done the Lord's work.
Right.
I've made the world a better place. And basically what he's coming out and saying is, this isn't activism. You sitting at home, getting on social media, and destroying someone's career through your outrage over social media because they did one thing bad, and then getting them removed from the public eye somehow. Like, the reality is, they're probably not going to be in the public image anymore. And let's say they are a bad person. They're going to probably keep doing that bad stuff that you call them out for anyway. But let's say it was just an honest mistake. Then you basically just took someone who was probably generally a good person, probably trying to do their best, made maybe one or two honest mistakes, probably more than that, but this one they got caught. And now they're unable to do good in the application that they were working in. And so, is nothing better than a flawed something? I don't think so. I don't think Obama thinks so. And I respect that a prominent figure like him is stepping up and saying this culture of living to like a perfect standard is no good for us. And you can't throw stones in a glass house, is the saying, meaning if you're calling people out for really what is harmless mistakes, if you were in the public image, you would never last either. You know, you're just as fragile as these guys are, and you're throwing stones, and your glass house is going to shatter. What do you think, John?
Yeah, for me, the big thing is there doesn't seem to be um, a, the punishment doesn't seem to beget the crime. Um,
Right.
in that sometimes someone, someone people do stuff when they're young that's stupid and they wish they never did. And when you look at someone who did something like that and then worked their whole life to reconcile that, at what point, like, you got to be able to say, like, okay, this person is a different person now. They learned, they grew. Um, there's got to be a capacity for that in people. And the thing is, and what really grinds my gears, what really gets me upset is when people are so willing to, to look on the bright side of a person that they agree with, or they're trying to, push their political agenda, the same political agenda as them. But as soon as it's someone they disagree with, that is the worst thing that could ever be done. And it's
Mm-hmm.
just, it's just a double standard. It's just, you know, it's tribalism. It's me versus it's us versus them, and it, it it's just like hypocrisy, and it's just not smart. It's not smart. It's not a smart way to act.
Right.
It's not where smart.
Yeah, it's definitely not critical thinking, and on top of that, it's weird, right? So like, let's say someone lived a life filled with bad mistakes, like maybe there's a murderer in jail, and then they come out of jail after having murdered someone, and then do something like really positive. We're weirdly very happy about that.
Right.
Whereas like someone who's lived a life mostly good and then commits a small bad mistake, we hate that person.
Mm-hmm. You
Whereas like the
cancel it.
murderer, we're able to forgive him because I guess they did all the bad things up front,
Mm-hmm.
and so we're like we already know who this guy is about, and then he surprised us, and so now we're happy. It's almost like we're treating people like they're either good or bad,
Mm-hmm.
and we're just waiting for them to prove us wrong, I guess, which is completely strange.
Right. Yeah. So good for you, Obama. Yeah, way to thanks, Obama.
Thanks, Obama. All right. So last time we talked about the Federal Reserve, and what do you have it? They met today, and they did some stuff. So I
Yeah.
think we should talk about what they did.
Right. Well, they did what we were expecting them to do, and they cut the federal funds rate by a quarter of a basis, or a quarter of a point, 25 basis points. Um, the
Which
odd
is how much percent for people who don't
point,
not familiar with points.
0.25%. So the Fed funds rate was operating within a range of 1.75 to 2%, and after this cut, the Fed funds rate should effectively stay within the range of 1.5 to 1.75. So they call it that a 25 basis point cut. A basis point being 0.01%.
So don't get confused when we're sitting here saying, "Oh, like interest rates are too low. The Fed's a bunch of morons. They're not doing like we don't know what the natural rate of interest is. Meaning we don't know what the market rate of interest should be. We're saying no one does. We're saying no one is smart enough to just predict all the time exactly what all these different loans being supplied, or all these demands for loans being supplied, all these savings being put on the market, what that super complicated system is going to produce in terms of a competitive interest rate. We're saying that's up for individual actors through trial and error to figure out. Like if a bank said, "Oh, this interest rate is way too high," and then could it offer a lower interest rate loan for people and then profit off it, then that's going to bring their competitors down with it. So the market has forces to find what a proper interest rate should be when people try to change it and either profit or fail. If they profit, then the market's going to have to follow behind. If they lose money, then they're going to get kicked out of the market. And so what we're saying is we don't know what it should be any more than anyone does. And the point is the Federal Reserve is sitting here saying, we know what the market needs. We know what people need. And I think that takes a lot of hubris to say something so ambitious. And so maybe theoretically the natural rate of interest could be exactly where it is today. But we're seeing a lot of strange activity in the markets that to us suggests that it's probably off.
Yeah, that's a really good point. So when he's talking about a market, so that's supply and demand, and when he's talking about lending, the supply and demand is of savings, of people that have accrued wealth to invest, and people that would like to use wealth in the current day that will be able to pay off in the future. So when there's an ample amount of both, then you have lending occurring, at the rate that clears the market. Well, what determines that rate? Well, if, like Jeff said, someone was able to offer loans that are cheaper than the competitors, and they're able to actually do the lending, what's preventing them from just capturing all the market share? Well, if they're doing that, then they're going to be loaning funds to people that aren't necessarily credit worthy. So they're going to get burned on a couple of those, and they're actually going to be worse off. So it's not just a matter of who can do the most of anything. It's actually a system of risk and reward, of supply and demand. If there isn't an ample amount of both, if there isn't an ample amount of savings, then you have a lot of demand for credit, and then the natural rate, which we were talking about, would go up. And if there's a lot of people that would like credit, and there's not a lot of savers that can offer that credit, then the rate at which the
I think you mixed up the first one. So if there's a lot of savings and not enough good ideas for businesses to put them to work to, or just not a lot of people looking for a loan, they don't need it, and there's a lot of savings, interest rates are going to be very low, right? Because it's going to be there's a high supply
right.
and low demand. But if you have very few savers and a lot of people demanding because they have ideas for businesses that they need to get done, then you can charge a much higher interest rate because there's very low supply. And that's just basic sort of supply and demand. That's probably one of the first things people teach in economics. And it works the same way for money as anything else.
Right, exactly.
Any other good.
And so what we're advocating for is for no one to intervene, to allow that market those market forces to operate. You would almost definitely, almost guaranteed find a more natural rate than what someone can pinpoint and just choose every 6 weeks. But what we currently have is a Federal Reserve that acts in such a way. They meet every 6 weeks and they discuss policy. It's a bunch of people with their economics PhDs and their models and their statistics and their they just sit in a room for 2 days and they talk about it and they say, well, this is the correct interest rate. and they'll come out. And if you were watching today, the Federal Reserve Chairman addressed the nation. He addressed the nation and to explain the decision they'd made, which was to cut rates 25 basis points. Well, so I watched it. I did watch it.
I didn't
I
watch it,
wasn't
full disclosure.
I wasn't able to watch it during work. I had to watch it afterwards, but I watched it. And funny enough, this is just a side note. It was on YouTube. I'm sure there was other streaming services, so this might be biased. But I was on YouTube and I saw that 895 people had watched the Federal Reserve's lending decision or interest rate decision. So there's 300 million
Yeah,
people
but
in this country.
football's way better.
What's that?
Football's
Yeah,
way better.
yeah. It's just
If Jerome Powell was putting on some pads and lighting people up during the FOMC, maybe people
right.
would watch it.
That would be entertaining. Well, in fact, he doesn't even really have to do. This is actually kind of unprecedented. Um, that Federal Reserve chairman in the past have not necessarily been as open, and after every meeting, he does an actual question and answer forum, like an actual presentation kind of thing, where in the past some Federal Reserve chairmen have just discussed it, chose the rates, and just released a statement without an actual question and answer. So I do give Jerome Powell props for trying to attempt a modicum of full disclosure. But that's about as much as I'll give him, because when he comes out there and he speaks, it has gotten so bad with something called Fed speak. He just comes out and he just says the same kind of things over and over, says it in a different way, and it's meant to just confuse and not transmit much information at all. It wasn't actually this bad like last year at this time. He would come out and he would speak and he would actually say like real sentences, real statements, and he would say like real things. Now it's like night and day, in my opinion. He just comes out there and he's got a piece of paper in front of him, and he takes a question, and when he gets a question, he looks down at his paper and then he reads off the paper like he's got prepared statements to say. It's just like it's so hard to like understand. Like and I'm saying I've been like studying this for a while of like what it means, like what policy, what it means when they're enacting different policy. And he's up there just speaking like he's saying words, but there's nothing going out. It's just I do encourage listeners of this podcast, if it intrigues you, go on YouTube, search Jerome Powell. 10/30/19 is today's date, and just listen to some of the questions and answers. He doesn't impress me that much with what he's saying.
Yeah, but how long before our podcast has more viewers than the FOMC?
Yeah, that's it. That would be awesome. That would be.
Should that be the goal of Do Less?
Yeah.
Get more viewers than Jerome Powell.
Right.
Then we say, hey Jerome,
We should set interest rates.
we have more viewers. Let us set the next interest
Right.
rate.
Yeah.
Another weird thing is there's such an anchoring bias in the Fed funds rate, right? So like they either go up or down 25 basis
Right.
points pretty much most of the time, right? And so there's really no reason that the previous rate should be close to the rate
Right.
it should be, right?
Right.
There's absolutely no reason for that. And so it's just this complete anchoring bias to the previous rate that creates a lag effect for them to be able to respond quickly.
Exactly. And it just goes to show you how just non-mathematical it is. It's just, it's like, it is policy. Like, it's a policy of numbers. It is numbers, but it's, the numbers don't, there's no mathematical proof that they're churning out. I mean, they have numerical models. They have analytical data. But if you're telling me that after all that analytical processing by you and your whole team of PhD in economics, which is really a lot like mathematics. Like a PhD in economics is so much math. And so you're telling me all these people came together and your result was a perfectly round 0.25, like a multiple of 0.25 always
of within the last
of with yeah with
interest
right.
rate that kept. And so, and look, maybe theoretically, with enough information, I'm really stretching myself thin here, but with enough information, someone could produce a model for a more optimal interest rate than the market itself could figure out. I'm not saying that's theoretically impossible, okay? But where, like, show us this model and show us why theoretically that model is going to spit out here's the optimal interest rate, right? And then you're just going to set that. It's not going to be like move up, move
Hmm.
down,
Right,
right? That's a weird way of doing
right.
it.
And the
But
engineer in me, I'm classically trained as an engineer. The engineer in me just rejects what they do. Like it's just like that's not
mhm.
mathematical. That's not scientific. That's oh, and that's actually what he said today. That's one thing I had written down here to bring up. He said,
Oh, is that in the show notes?
yeah, I'll include a link to this one in the show notes. But a quote from Jerome Powell is he was asked about specific wording, which with Fed speak, like I was saying, it's very wordy. It's very dance around the point. Don't really say what you're trying to say, but say everything else and kind of infer what you want to mean. But a question was specifically about the wording. In the statement they released the statement first, and then they do the press conference. So that in the Federal Reserve statement, FOMC statement, they use the term assess the appropriate path for the Fed funds rate. In the in the in the press conference, while answering one of the questions, Jerome Powell said the phrase "likely to remain appropriate," like this Fed funds rate is likely to remain, as opposed to assess the appropriate path. So kind of just like the question was about, um, like, are you guys in a holding? Are you guys like holding steady? You just cut rates, but now you're going to stay here, or are you just cut rates and now you're looking forward for the next either hike or cut? So it's just kind of like a very technical question about the wording they use, and it was really it. At first, I just kind of like wanted to dismiss the question as like, oh, like I don't even know how I would answer that. That's just like you're just asking too much of a technical question. But Jerome Powell, instead of kind of shrugging it off, he doubled down. He said, "Oh, we determine our language in our statement and our press conference based on practice and science and history in determining the post meeting statement." And so he's specifically citing. I mean, practice and history. I can kind of. Okay, that's fine. Like, yeah, I'm sure you do practice it a lot. I mean, that's your only job to do these press conferences. And history, yeah, I mean, there's 100 years of Federal Reserve chairman, so there's probably something that got passed on the line. But you're telling me science in the you're determining your wording based on science? I don't think so. Like, what scientific model is coming up with assess the appropriate path versus likely to remain appropriate? It's just it's actually very entertaining. I mean that's why we're here. That's why we're talking about it. It is entertaining. It's like these people parading about this super complicated thing that's we're going to talk about it, and it's very approachable. Look at me. I'm having this press conference. You can ask me questions, ask me whatever you want, and then you come out and say something like that, and it's just like, uh, like what are you guys doing? Like just be honest. Like you know, I don't know. That's something that bothers me.
Yeah, and I mean, I think if they were being honest, they would say some pessimistic things, right? Because they're cutting rates, and so like based on the monetary theory, which I don't agree with, but the monetary theory is that you need to ease the monetary environment during bad times so that people have a easier time getting things going to really juice the recovery, right? So if they're easing, then that means they see bad times either now or in the future, near future at least, right? And so if they're cutting rates but also saying there's no problem, those are in direct contradiction of one
Right.
another. And so they're not being honest. But what I think is happening is they think if they're being pessimistic, oh, the public just can't handle
Mm-hmm.
that. Then we'll just go into a spiral. Everyone will close down their business and the entire American economy will come to a halt. And it's like, if our economy is that fragile in the first place, we got some bigger problems than the words Jerome Powell uses at the Fed conference.
Yeah, and I mean you're definitely right. That's idealistic. Because what actually ends up happening, the reason they have to act this way is because you get something like what we saw in December, where he just said like one word. I forget the word. He said like one word in the press conference that was like pretty hawkish, like kind of indicating they were gonna
Mm-hmm.
raise rates in the future, which
Mm-hmm.
is less favorable for businesses, especially businesses that borrow money, because that means that they're going to have to borrow at a higher price, at a higher interest rate. Um, and um, he said like one word, and the stock market lost 2%. And and people came out and were like, oh, like why, like Powell, you didn't choose your words carefully, you didn't, and it's just like, what? It's not up to one person to have a,
All right.
like,
How absurd.
it's
Like,
absurd.
one guy choose the wrong
One word,
word and then, like,
and that's billions of dollars.
2%.
That's maybe tens of billions or hundreds of billions of dollars of market value in 2% of the Dow Jones or the S&P 500. Like that's
Right,
just
because he said the wrong word.
like you just gotta step back and say, are you really? Am I really gonna tell him he said the wrong word choice, or am I gonna look around me and think something about these companies isn't right? If one word can send their stocks down, the broad market down 2%, like that's just something's not.
Yeah, like, I don't know about you, but, like, the people making bread and things that people are never going to stop buying, I don't think they care when Jerome Powell says if instead of
Right.
else or
Yeah.
whatever. Like, because these things, they are important and they matter and they're not going anywhere.
Right.
And so, yeah, maybe their bottom line would be affected, but probably not because they're not borrowing a bunch of money. But, like, it's really companies that have a dubious existence that a word here or there can significantly affect their share
Right.
price. That's
Yeah. If you
it's a weird world to live.
if your outlook on borrowing money at 2.75% versus 2.5%, you know, if that's gonna if that's gonna send your actually there is a company called ConAgra. I think it's that same day, the December FOMC meeting. I might have the date wrong, but there was one company that he said something hawkish, and the company went down 20%. It's just like it's just that's the straw that broke the camel's back. I don't think that I'm going to invest in that company, even though now we're in a dovish cycle, which is the opposite of hawkish, of rate cuts, and that stock has since gained back that 20% on the the idea that it's going to be able to borrow cheaply. I don't think that that's a
Right.
company that I want my money in because it's like that's how flimsy and fragile it is. Like that it just doesn't make sense.
Right. And I mean, how many projects are just sitting on the shelf right now because the Fed funds rate is just 25 basis points too high? Like, we've had essentially 0% interest for the past 10 years. If that's not enough time of low interest to fund all the good ideas out there, like, I really don't know what
Yeah.
is. So the idea at this point that, like, some good idea is just waiting to be taken off the shelf, but our Fed funds rate just it wasn't ready to go up to 2.5. We just got to bring it back down to 2.25 or whatever.
Yeah.
That is really dubious to me as a proposition. I think basically right now all the good ideas have been had and they have been funded. And that's why you see crazy companies out there that have done nothing but lost money since their existence going public. They have done nothing but ever lost money in their existence. And then they go public
Right.
thinking people are going to buy this.
Yeah.
And then they do. And they do buy
Yeah.
it. So if you ask me, every good idea has been funded. Every almost every bad idea has been funded too.
Right.
And so the idea that what this market needs is low interest rates is pretty absurd to me.
So I wouldn't disagree with that, but I would maybe just um, add on to it, and I would say that when you say every good idea has been funded, I would say some good ideas have been funded and were beaten out by bad ideas. Because in a low rate environment, in a potentially
Mm,
negative rate environment,
true.
it's actually not fair to say company that's smaller with less revenue, they can just get beaten out by a company that's large with greater revenue. Because even if that larger company isn't able to be as efficient, in a competitive market, it's really down to efficiency. Like that's how you gain market share. If you're
Hmm.
able to create a product that's a better value at a lower cost, you're being more efficient and you will beat the competition. But with low interest rates and you're able to borrow so easily, a large company is able to cover their losses. They can operate less efficiently and can sell at a
Right.
lower price point to make up for their lack of efficiency. And just until a point where the good competition is wiped out, and
Gives up. Yeah.
and and what it comes down to, it's a race for borrowing. And when you're borrowing money, a corporation that borrows money, it's largely looked at what their revenue and their market cap. So you look at those
Hmm.
things, and the bigger company is going to have bigger of both of those. So they're going to be able to borrow. They're going to have a larger credit line to borrow, and so a larger company is has a higher advantage over a smaller company that may be more efficient, just because they're able um, to price them out of the market through cheap money.
Right. And they can even take do a leveraged buyout where they take out loans and basically offer them a price where they'd be stupid to
Mm-hmm.
refuse and then buy them out. But that offer is basically being subsidized by the Federal Reserve. Like in a competitive market, this idea where you could just buy out all your competition wouldn't last very long. Like eventually you'd run out of capital to keep this going,
Right.
and you'd have to get more efficient.
But when borrowing is so
But if
cheap,
you have if people subsidizing your borrowing, then yeah, you can leverage out and just do these buyouts, and then just keep buying out your competition.
exactly. So, um, and we did record another episode called "The Moral Hazard of Negative Interest Rates," which we may release in part or in full at a later date. Um, but this is part of that, and there's a lot more that goes into it. But it's just another reason why deviating from the natural rate, the market, the true market rate of lending, can be catastrophic for economies, because you're just inviting the destruction of efficiency. And when you're destroying efficiency, you're destroying value. You're losing value where you otherwise would have had value. So um, it's really not something you want to mess with. The rate of lending is so important to an economy, and if you get it wrong, it's it can be devastating. Um, so
Right, and if you get it wrong on the high end, that's bad too, right? So that can stifle growth in your economy. So it goes both
right,
ways. It's just to us the idea that zero would be on the high end.
unlikely.
It's probably not unlikely
So
to
that's a
us.
good.
So we,
Go ahead.
yeah, we assume we're probably been too low.
Right.
But the point is here, we don't know what the real rate is. Maybe it was
Yeah.
zero.
So
Maybe we're
that's a good
wrong.
segue to another thing I have in my notes about what he said. One of the questions that was brought up um, was like Chairman Powell, do you think that you're creating an accommodating environment for business with your interest rate policy? And Jerome Powell looked in the audience. He looked right at me. He said, "We're offering, a Fed funds rate at 1.5 to 1.75%. When you adjust for inflation, that real rate is lower than zero." He straight up said the real rate is below zero. So he said, "Yes, I think we're being accommodative." I couldn't believe that he actually admitted that he admitted, because that's such a taboo thing. Having negative interest rates is very it's backwards. It's for a lot of reasons we were just saying and more. It's not really. It shouldn't really be welcome in an economy. It's kind of like a twilight zone. And so for him to come out and say it, he said the real rate, which is the rate adjusted for inflation, is below zero. He's just basically admitting like. And so when he said that, I was awestruck. I was like, I can't believe he said that. It must have been a mistake. Like he must have, he definitely shouldn't have said that. That's really, that shows how kind
Who
of
put a question mark on the teleprompter?
yeah, the real rate is below zero. Um, but so he said that, and I was like, oh, that must have been a mistake. Like I'm sure he didn't mean that. Like that makes us look so goofy as a nation to be operating with like this twilight zone lending rates. But I was thinking about it more, and I think that it might actually be the beginning of a plot. If he sees something really bad that the economy is not really kind of privy to, which could be the case. I mean they're cutting rates while saying the economy's in a great spot, which doesn't make sense in itself. But so if something's really bad that he's not really telling us, and his plan is to actually have negative rates on the table as a potential option. Saying something like that could be his gateway to like, if we ever get to the point where our nominal rate, so the rate before inflation, is at zero and he wants it cut again, he could say, well, look back past,
Right.
excuse me, the past, year we've been operating in real negative rates. So what's the big deal if it's nominally negative?
Mm-hmm.
So it's kind of his dipping his toe in the water and saying, don't worry, like our economy is functioning and we have negative rates and negative real rates. So in the future, if he's going to say, okay, we're going negative nominally, he can say, and don't worry about it. We've already had negative real for the past, such and such.
Yeah. Can you imagine like a CEO standing in front of his shareholders and he's just laying off people left and right, like massive layoffs. And they're like, hey, why are you laying people off? And he's like, everything's great right now. Everything's fantastic. We all know what this is a sign of. And yet he's just standing there, everything's great. Everything's great.
And so Jeff, what you're comparing the layoffs to is cutting rates. Like cutting rates is like, the economy needs help. The economy needs stimulus. It's not doing well on its own. Mm-hmm. For him to cut rates and then come out and say, everything's great. Like we have a really strong economy and it looks like it's going to stay that way. And if it stays that way, we're going to keep cutting rates. He didn't say that, but that's a logical conclusion you can make from that statement. Like it's not data. He keeps saying like, oh, we're data dependent. We're data driven. We're going to make assessment as more data comes out. We'll be able to make. We're open to any option of moving forward. Rate hikes, rate cuts, rate pauses. We're open to all that. We're just data dependent. It's like, well, I don't believe you because right now you're telling me that like the data's good and you're cutting rates. So it's like I don't know what to believe.
Right.
I also have written. He kept talking about how the difference between quantitative easing, which was in 2009 through 2014, and what he's doing today with the repo market and like the term lending, which is the same as quantitative easing, but he's like it's not quantitative easing. He's like in 2009, after 2008, we were buying long-term treasuries with the hope that long-term treasury yields would go down. Currently, what we're doing is we're purchasing short-term treasuries. with the short-term treasury yields go down. It's like it's nothing totally different. So it's like that was making me laugh because it's like I hear what you're saying, but I don't agree with you. I think that's very much the same thing. He was talking about trade uncertainty. He got a couple questions on trade uncertainty, which is the China tariffs. Which they've cited in past meetings. They've cited trade uncertainty when Donald Trump has been raising tariffs and China has been retaliating. And it was a really funny wording of one of the things because he said he said we've seen some trade, uncertainty kind of diminish, but he's like we haven't seen like maintained maintained like a constant trade regularity. Like he was just saying, like we have to see a period of long, maintained, constant trade, like stability. Um, he
Hmm.
said what we saw a phase one potential agreement. like he he couldn't like obviously he couldn't say they got a phase one deal or they got anything in writing because that's not true. They got a phase, and he's like, and we've seen yes a phase one potential deal, but um,
A phase one, category
right,
7, section 2.
right.
Just,
It's just another one of those things where he wants to leave it on the table. Like for him to say something like, "Oh, trade uncertainty has all but left us," then in the future he's not able to say, trade uncertainty because people will say, "Oh, I thought that left us." Um, he's got to leave the door open so that in the case of Trump tweets tomorrow, you know, hike tariffs to 50%, he could say like, "All right, we're cutting rates again because we gotta accommodate for that."
hmm. And there's the question is, should the Fed even be accommodating for bad policy from the executive office? Like, let's say the president comes out and says, I'm banning sliced bread. I've had enough of it.
That's your second.
No more.
That's your second sliced bread metaphor. You got something on the mind?
I'm out of sliced bread, and I have all these cold cuts. They're gonna go bad.
So you really are thinking about sliced bread.
If any of our listeners can send me some sliced bread, that would be fantastic. But so let's say the president. All right, let's say he bans Fruit Loops. I don't know. My point is that's stupid. We should not be banning Fruit Loops.
Right.
Okay. And if the Fed goes, oh, they throw their hands up, like we gotta ease. What can we do? He's banning Fruit Loops.
Right.
Like, is that what they should be doing? Just basically accommodating every poor policy decision coming from the executive branch? No, because then they're just enabling bad decision making. Then we don't bear the consequences of those poor decisions. So, you know, they shouldn't be just accommodating whatever negative impact. And let's say it's not even a bad decision. Let's say these tariffs actually are very important for uh, making China correct its behavior, which
Yeah.
I don't necessarily buy that the Chinese government is going to start treating its civilians with human rights and dignity because we put tariffs on them. But let's say it's going to work. Let's say it's the right policy. Um, there's still a cost to that, and we should bear it and evaluate: is this worth the trade-off? Nothing is just good. Nothing is just absolutely good. It's good compared to all other options. There's no such thing as like this is absolutely good all the time. You know, like sliced bread,
Yeah.
pretty good. Not for $100,
Right.
it's not.
Yeah. Exactly.
I'll just, I'll get Fruit Loops unless they're
I'll buy
banned.
whole bread and I'll slice it myself.
Yeah, I'll just buy the whole loaf and slice. If they're charging $99 to slice my bread, there's a
Right.
limit. And so, you know, some decisions may be worth it, but you have to bear the cost and evaluate: is this worth it? And if the Fed's just taking away all the costs and bearing them and kicking the can down the road to a later date, then we can't accurately assess what is a good idea and what's a bad idea.
Right. Yeah, it's a really good context. And that's actually all decision making. Uh, to to remember, you know, there's no absolute good or bad. It's always framed with the cost of making that decision. Um,
I mean, in economics, they call that opportunity
mhm.
cost, and that's a very important thing to understand about economics. Another example that's very good is, let's say you win some concert tickets, and they're like front row seats, and they would go for $1,000. And now you look at this concert and you go, wow, I would never pay $1,000 to go see this show front row. But you keep those tickets and you go to the show. You could have sold those tickets for $1,000. So if you keep the tickets that you won, even if you got them for free, and you keep them and you go to the show, you're in effect trading $1,000, which you could have in your hands, to go see that show, which is no different than trading $1,000 you currently have for those tickets to go see the show. So either way, no matter what the market price of those tickets, or no matter whether you got the tickets yourself or whatever, you are in effect paying the market price of those tickets to go see that show, no matter what.
Yeah.
Because you can always make that trade, because the market clears at that trade.
Yeah, like not spending $1,000, spending $1,000 is effectively the same thing as not receiving $1,000 that you otherwise could easily receive.
Mm-hmm.
So choosing that. Yeah.
Exactly.
The last little quip I had about this this Federal Reserve press conference from Jay Powell was he was kind of going in. He had a question about the repo market, which we spoke about on the last podcast about how short-term lending has kind of basically been spiking. It seems that banks don't want to lend at the rate that they're subjected to. They want to get higher yields for the reserves that they have, and thus they're demanding that the rate goes up for them to lend the money. Well, Jerome Powell cited this. He said, "We're doing some forensics on the repo market. They're anticipating the repo operations to last all the way into January of next year." And so he's like, "It's normal. It's just a technicality. We're just, we're looking at what's going on." He said, I don't know if he was even supposed to say this. He's like, the strange thing we noticed was we asked some of the actors, we asked some of the banks in the repo market, what rate of reserves they're comfortable with, and we looked at them, and they actually had an amount of reserves that was above and beyond the rate that they're comfortable with. So that means they have reserves that are available for the overnight lending market. He said, but there's a strange amount of restriction that we've noticed. The liquidity flow that you would expect in that scenario wasn't actually flowing. The banks with lending capability were not actually participating in the overnight lending market. And he's like, so we're actually looking into that to see why they're doing that. And I was just looking at him and I was like, well, I'll tell you why they're not doing that. Because the rates are too low. They don't want to lend them their excess reserves because they don't feel comfortable with the rate at which they don't feel like the other entities are creditworthy. They want a higher rate, which is why you see the spikes in the rate.
It's how about they don't want it. That's a good enough reason, Like, why aren't they? Because they don't wanna.
They demand.
And people aren't gonna do. People aren't gonna do what they don't want to do. So if you try to be like, you should be doing this, they can just say, hey, don't wanna.
Yeah. So, again, I encourage the listeners, especially if you're just getting into economics, to macroeconomic policy kind of, which is what this is. I encourage you to take a look at the press conference from Jerome Powell yesterday, and just see if what he's saying makes sense to you. It probably won't. It does make sense to me. But it's also interesting once you hear him say what he says, to then go read, Yahoo Finance will publish articles, CNBC will publish articles. Oh, the Fed, the Fed cut rates, and this is why. They saw this and they saw this, and people just try to backfill the information that would make the story like, oh, this is why. Like, of course they did this because this is why. And so you just look at it.
Right. They always write it after the fact.
Yeah. Everyone is like let's see what the Federal Reserve does, and then they do it, and it's like, of course they did this, and here's why, and it's just like, it's a load of baloney. It's just you got to look at it and you got to understand that, uh, and learn.
Well put, John.
Thank you.
Well put. Yeah, I mean, so if you listen to this podcast and you're still awake, go check out the FOMC meeting, and we promise that your problem will be solved. Um, and you might learn something or two.
I will include a link in the show description. Um, that'll actually take you right to
The show
the show
notes.
notes. It'll take you right to that YouTube video. So, um, yeah. Anything else you want to discuss?
No, I think we've covered enough
Yeah,
today. We'll definitely be doing more. Not every episode is going to be about the Fed, so we just think it's important, and
and they just cut rates.
we're trying to, yeah, and they just cut rates, which is relevant. But we just think it's important, and not really enough people our age. We're like 25. What are you, 26 now, John?
26.
26. You old bastard. Um, yeah, so not a lot of young people our age really care about them or what they do, and which I understand because we don't have that much money saved up probably unless you're freaking awesome and you're killing it. I guess it's not super relevant, but it is relevant to the economic outlook that we're facing. And if we get another financial crisis and labor markets are completely screwed up and there's nowhere to find a job, and you're sitting around wondering what the heck happened, what's going on, and you're like, people are going to be throwing blame left and right. Everyone's going to have someone to blame. But if you really actually have a good understanding of what's going on and what are really the big players here and have a sense of scope, you'll be able to make sense of a twisted upside down world, and it won't just hit you on the upside of the head. I'm sure if you were working at WeWork and you got laid off and you're like, what the heck happened? Maybe you won't be as surprised if you had a bigger sense of scope and realize that, this type of company is kind of sketchy in the first place. But yeah, we just think if it's on the list of things that are important and to be worried about. Behind sliced bread, this is a pretty good one. So it's definitely something to be thinking about.
Absolutely. I agree 100%. All right, well, see you next time.